Hello and welcome. You're watching Buy Now, Sell Now on ET Now. My name is Alex Matthew and with me is Cheryl D'Souza. We'll take you through the next 1 hour or so. Let's first take a very quick look at what is happening in the markets this Friday. And it's turning out to be a very decent end to what has been a bit of a wobbly week. But the strength that was displayed in the markets towards the end of yesterday's session looks to be holding true today. So you've got gains of upwards of 0.5% each for the benchmarks, and you have the broader market indices that are actually outperforming and are doing quite well for themselves. Let's quickly take a look at what is happening in the Nifty 50, and you will see that Wipro, which had a stellar performance, or rather actually it was in line, but I think the guidance for growth for the new financial year, for this financial year, was something that the street took very positively, and the expectation, of course, that these IT companies, these large IT companies will do quite well on the earnings front is bolstering sentiment for them. 8.5% for Wipro, and that's really pulling the index forward. A lot of other names also doing quite well on the Nifty 50. In fact, 38 gainers and only 12 declines as of now. So it looks as if the market breadth is also supportive. Like I mentioned earlier, you have the broader market indices that are currently trading with gains of over 1% each. So overall, it looks like a good picture to end the week on. Cheryl?
Yes, definitely, Alex, and like you mentioned, today Wipro is on fire, and this is on back of his Q for earnings, and the street is actually liking it. The stock has gained more since 15th January, I beg your pardon, 15th of July 2020, and that is one of the top stocks in our BNSN cloud for the day. The stock is up about 20%, YTD is up about 147% in the last 1 year. So Wipro definitely seeing healthy gains, also powering the Nifty IT index ahead in today's trading session. Apart from that, you have NMDC that is in focus today. The stock has maintained outperform stance with a target of 186 rupees per share. They've raised their also FY 22-23 prices by 500 rupees per ton. If you see, NMDC is up over about 32% in the past 2 months. That is Credit Suisse talking about NMDC. Ashoka Buildcon, that particular counter is surging in trade today. The company has received an order from Gujarat Rail Infrastructure Development for gauge conversion of a section of a broad gauge. So on back of that, that particular counter is up over 9% in trade. Tata Motors DVR, a stock in focus as AS investor Rakesh Jhunjhunwala has bought 10 million shares or 1.97% stake in Tata Motors DVR. This is via a block deal on the NSE. That's the reason why Tata Motors DVR is buzzing. Mindtree is in focus ahead of its Q for earnings. You have NFL that is in focus because the government has issued requests for proposal to appoint legal advisors, merchant bankers for divestment in the company. Tata Power is also in focus in trade. Apart from that, you have Graphite and HEG that are buzzing in trade on back of Jefferies, a buy call coming in for both of these counters. So these are the stocks that are featuring in the stock cloud of the day today. All right, now talking about stocks, let's move on and let's get on board. Our guests for today, we have Kunal Bothra as well as we have Raghavendra Kedia, who's Managing Director at Image Capital. Good morning, gentlemen, and thank you for waiting by. Kunal, I'll come first to you. IT index definitely is soaring in trade, all thanks to Wipro's earnings as powering the Nifty IT index. But what's your outlook? What's your outlook on the market, overall market picture as of now? Yes, we had second wave of COVID-19 here, but the markets are actually showing some sort of resilience as of now.
So, good morning, Cheryl. Good morning, everyone. I think it's been a tough week for the markets, frankly, because what started off this week, the scare of this 1,500 point sell-off on the Bank Nifty and almost a 500 point cut on the Nifty on that Monday, I think put many of the traders off into a bit of a risk-off mode, I would say. So I think it comes as a good relief for at the end of the week, the markets are going into with some sort of recovery on the indices. There have been mixed texture for markets in terms of sectors as well. So I think in terms of the last couple of days, we've seen a good recovery coming across in the banking names as well as the erstwhile defensives like the ITs and the pharmas. Now, in terms of stock-specific ideas, I would continue to be bullish on individual names, and two stocks which I'm highlighting at this hour. One of them is intriguing because it's a bond, Muthoot Finance. Now I'm expecting, in fact, last week at the Chartbuster segment on gold as well, indicating that how gold has formed a near-term bottom at those 44,000 Indian rupee mark, and probably gold should move up higher. Muthoot Finance, on the other hand, apparently has been making a pattern of lower highs and lower lows. It's come back to its 200-day moving average and below that as well. But now I think on the short-term charts, it's showing those classical signs of bottoming out. So I think it's an interesting, trade from a near-term view. I would expect a decent rally of at least another 7%, 7 to 8% on the upside for Muthoot Finance. Would suggest a buy with 1250 as a target, and stoppers could be kept at 1120 mark. The second one which I'm suggesting is a buy on Tata Motors. Yes, the stock has been in the thick of news flow, but as I was highlighting 2 days back, that how many of these auto stocks are looking quite ripe for a reversal and more for a much stronger reversal. Now, when you're talking of a sector going through a revival mode, it's possible that one of the best stocks from that sector in terms of performer should pick up pace and take that leadership from the front. So you're seeing those qualities coming back again for Tata Motors. Would suggest a buy. Targets to be kept at 330 and stop loss at 300.
All right, fair enough. Interesting calls coming in there from Kunal. Let's go across to Raghavendra Kedia as well, who is Managing Director at MH Capital. Thank you so much, Raghavendra, for joining us, for taking the time. Good morning to you. What do you see as the most interesting pocket of strength as we stand right now? Is this IT earnings something that has bolstered sentiment for you? And what are your high risk and low risk ideas for today?
Good morning, Alex. Coming to your first question, what seems to be the pocket of strength? We believe that the export-oriented companies with the strength in US dollars would do very well. So information technology and pharma sector seems to be on top of the charts in terms of what could do augur well. Wipro's earnings and the Infosys buyback is just how well these IT companies are financially placed in terms of cash reach, how the IT spend across US and Europe is auguring, which is very good for this IT space. Even the export-oriented pharma companies are showing a very good uptick with orders coming from Middle East Asia and across. So these two sectors, pharmaceutical and information technology, would be the outperforming sectors, and large cap names in these would broadly be the top picks going ahead.
Okay. Why don't you take us through your high risk and low risk ideas as well?
Sure. Starting with our moderate risk idea is Larsen & Toubro. Larsen & Toubro is the best play for India's growth story. With a market capitalization of 2 lakh crore, this company even clocked revenues of more than 1.5 lakh crores even in pandemic times. So this tells us about the strength of Larsen. It has business verticals across engineering, construction, real estate, hydrocarbons, financial services, and information technology. So the sum of the parts valuation for Larsen & Toubro would be much higher. We believe if one can hold this in your core portfolio, it could give a target of 1700, that is 25% upside from current levels of 1400. Larsen has a very good order book from defense. They have supplied guns to the army, drones to the Air Force, and ships to the Indian Navy, which continues to do very well in terms of order book as the Make in India theme gets a good boost from the government. So Larsen & Toubro would be your moderate risk idea. Moving on to a high risk idea is Bharat Petroleum, which we believe that government has already floated tenders in terms of getting expression of interest for a stake sale. Vedanta and 2 more companies have expressed the desire to buy Bharat Petroleum BPCL. BPCL in the last few quarters have also sold its treasury shares, refineries, that has got its windfall money of around 15,000 crores. So we believe a generous dividend would be on its way from Bharat Petroleum in the days ahead. Buy Bharat Petroleum at current levels of 400 for an upside target of 700. This would be a high risk, high reward idea from our side.
All right, we're slipping into a short break. On the other side, we have a lot of interesting stuff for you to look forward to. I request both Kunal and Raghavendra to stay with us for a bit. We'll come back in just a short while, so do stay tuned. All right, on that note, let's go straight to the query segment. I do know that quite a few of our viewers are in fact tuning in, and in fact they've tuned in live. Let's very quickly, just to set the context, I want to quickly go across to Kunal on Hindustan Copper itself. Let's start with that, Kunal. It's looking really, really strong on the charts today. Do you have any calls that you would like to give our viewers?
I think it's an excellent chart. Alex done exceedingly well last 6-7 months. Very, very fruitful for the stock, from being a stock which was at just 40 rupees or 35 rupees end of 2020 to being a stock which is at 140 plus. I think it's been phenomenal. Looks good, attractive from current levels. So I think for anyone who's looking to trade, then I think at 140, 144 where the stock is trading, it could be a good momentum buy for a target of 164, and stop loss could be kept at 134.
We've got the first question coming in from Srinivasan. He's bought ITC at the range of 180. He's asking how long he should hold on for good returns. Now this, I think, Raghavendra, this is the question that a lot of ITC investors have asked in the past, and some of them with a little bit of infuriation. But it's looking reasonably good right now. What is the outlook for Srinivasan?
Well, ITC would be a patience play going ahead. Two verticals of ITC are doing extremely well in the last 2 quarters, specifically the paper segment and the hotel segment has seen some kind of uptick, which was beaten down in 2019, second half, and 2020. So we believe, and plus the FMCG would be posting robust earnings. So from here, there could be a catch-up play of ITC with its other FMCG peers in terms of earnings multiple, in terms of revenue. And the board has also come on record, the management, and said that they would come out with a very generous dividend policy and reward the minority shareholders going ahead. So my advice to Mr. Srinivasan, the investor or trader in the ITC, would be to hold this stock for another 1 or 2 quarters, that is 3 to 6 months, for a good upside in ITC.
All right, there's a next query coming in from Palash Agarwal. He's saying that he's bought Yes Bank at a price of 55 rupees per share. He wants to know whether it's a good time to buy, an average price further down. Kunal, Yes Bank 55 rupees per share. I cannot quite recollect when I've seen that kind of stock price come on Yes Bank. What should Palash do with his holding currently?
I think you should look to exit the stock. Remember, when you're looking at investing, I think you don't invest and look at the opportunities of investment just because some of the stocks have been beaten down significantly. The fact that these stocks have been beaten down itself tells you that the markets are not giving them premium, and there has been some sort of a spate of negative news flow or events around those kind of stocks. So it doesn't make sense to hold on to investments on Yes Bank. My advice would be to shift and make a switch towards the quality banks, the ones which have a stronger pedigree of showing historical price returns or historical performance on the fundamental side. So I think something like ICICI Bank, something like a Kotak Bank or an HDFC Bank. The best fact is that these stocks have already gone through a correction of 15 to 20% from their 1 month, 2 month high. So that also augurs a very well opportunity for someone who's looking to invest from a longer term view. So my advice would be to make a switch from Yes Bank towards any of these 3 key or 4 top quality private sector banks.
All right, I'm unsure whether the next one is a query or an observation, because Mahesh Vaidyanathan has said that Alchem Laboratories, he bought at an average price of 2750, which is more or less where the stock is currently trading, and he's bought it for the next 5 years. He thinks that the fundamentals look very good. They are undervalued, and the stock is undervalued rather, and it's likely to see consistent EPS growth, which makes it even more attractive. So these are the comments coming in from our viewer, Raghavendra. I would like to hear from you whether they're consistent with what you think about the stock.
Mr. Mahesh, I largely agree with your observation. Alchem Labs management is very conservative in its forecast and outlook. They have gone with I would say, a slow and steady growth path where the earnings have gone up, the revenues continue to do well. Specifically, if you see the last 2 quarters, that export revenue has increased as a bigger pie from the total sales. This would augur very well. So it's a good management with a good corporate governance and a slow and steady earning growth with expansion and very clarity in terms of management. What would they be doing in the next 2 years to 4 years? So hold this stock for a medium to long-term horizon, and it should continue to do well. It could be an outperformer from its other pharma peers as well.
All right, the next query has come from Radesh Rivyash. If I'm sorry if I've pronounced your name incorrectly. He's saying that he's bought Adani Green Energy for 850 rupees per share. He wants to know for how long can he continue to hold on to this particular counter. Kunal, Adani Green Energy, all Adani Group stocks have seen massive surge, and what sort of a rally coming in on the Adani Group stocks? What should our viewer do with this current holding?
Frankly, I think it's very difficult to give a technical view in such kind of stocks. So it's been an exceptional or a dream run for Adani Green, Adani Group of stocks overall in the last I think 2 years, from 2020 start or 2019 end. The stock which was at 2 digits, 80 rupees or 100 odd rupees end of 2020, second half of end of 2019, to being a stock which is at 1100 rupees. I think it's been a phenomenal uptrend. Now, when you're looking to buy these stocks, and since the fact that the viewer has bought it at 850 odd levels, he's sitting on a good profit. But you have to understand that whether the stock has stamina or the appetite rather to replicate the similar kind of a performance what it has done in the last 2 years. So rising up more than 12 times, 13 times in that kind of a time span. If that's the case, if that's the view, then probably you can hold on to it. But I think if you're looking at it from a pure trading play, then I believe you should look to book out profits on short-term rallies, because when corrections come into these kind of names, those corrections could be very sharp and vicious. So my advice would be to try and take profits and look at investing into some top quality banks or top quality auto stocks as well, or maybe IT stocks like Wipro, which offer some very good opportunity from a longer term.
All right, gentlemen, let's try and speed things up. I'm going to aim to try and take at least 15 queries today. So Tarun Gambhir's got the next one. He's got a fundamental question, and this one on Dhanuka Agritech. This one is for you, Raghavendra. Would you suggest getting into this counter, and why?
Dhanuka Agritech would do well in the next 2 quarters. First, the forecast for monsoon from the IMD has come out to be good, and the overall government policies in this budget and last year's budget have been a big thrust on rural spend with a focus on agriculture. So the overall theme would do very well for entire agri stocks, and Dhanuka Agritech would be beneficiary. So yes, it's a buy from current levels.
We have our next viewer query coming in from Manjunath Bagodi. She's saying that he wants a view rather on KPIT Tech for a long term. Wants to know, is it a good time to enter this particular counter? Kunal, what's your view on KPIT Tech, or Birlasoft as it's now known as?
So I think KPIT Tech looks quite attractive. I think if I'm not wrong, trading at 190, 193 at current levels looks very attractive, and specifically from a longer term, we have been very bullish on mid-cap IT and the overall IT stocks. So I think KPIT is a good bet at 190 odd levels.
Coming back to you, Kunal, on SBI, we've got Naresh Banapattu. Naresh Bappanapattu, who's bought SBI at 200 and he's bought SBI at 357. He's bought 250 shares at 357. Apologies for that. What would you suggest that he do for the next 3 months?
So I think for the next 3 months, it could be a bit of a rough ride for many of the PSU banking stocks. They have been significant underperformers, but SBI of course stands out to be the strongest, even from the underperforming lot. But I believe that if your horizon is more long-term, and if you can stretch your horizon to long-term, that's where I believe you could probably see the real potential getting unleashed for a stock like SBI. So my suggestion would be, rather than tweaking with the stock or with the price, I think you should tweak and try and expand your time horizon from 3 months to at least, if not to less, if not it should be at least 2 years or more for a stock like SBI. I think if you have that kind of a time frame, you could see even levels of 450 to 500 on the stock.
Our next query is coming in from Shanmuga Sundaram, saying that he has NBCC 3,000 shares at 52 rupees per share. Wants to know whether he can continue to hold on to this particular counter. What's your view on this, Kunal, NBCC?
Well, I think many of these stocks from the cap goods space, they did pretty well in the last 4-5 months on the back of some performance from L&T, where L&T surged up higher. NBCC is a very high volatile stock, a very high beta name. I believe that if someone is looking to buy specifically from a longer term view, then why not switch to an L&T? I think even at current levels, that stock looks fairly attractive to me on the longer term charts. And I think it's been one of the top performers as well over the long term. So I would suggest a switch from NBCC to something like L&T.
KK's got the next question, and this one is coming to you, Raghavendra. He's bought 400 BPCL shares at 440 and 400 HPCL shares at 236. He's asking whether he can expect large dividends and price appreciation, because that is why he got into the stock and it hasn't happened yet. He has a horizon of 6 months. Would you first suggest that he should extend the horizon if he's looking for material price appreciation?
If he goes wrong, he can extend it from 6 months to 9 months. But yes, expect a very generous windfall dividend, especially from BPCL. My advice would be even to switch your Hindustan Petroleum to BPCL. The company is also going for probably a stake sale entirely. So that could be another big upside for a target of 700 on BPCL. Hold BPCL for 6 to 9 months.
We have a next query coming in from Aniket Gandhi, and he's saying that he wants to know whether Amara Raja Batteries is a good buy as of now, wants to know the advice fundamentally and technically for the future. But Raghavendra, I will come to you for this. What's your view on Amara Raja Batteries?
Well, this entire stock, Amara Raja, moved up on the story that EV would be a big theme going ahead, which we agree with. But considering the valuations are slightly expensive and the stock being a good stock in terms of returns and management, one can look to buy this stock at any dip. So this would be not buying at current levels, but wait for a correction and buy the stock for if there is any 10% correction in this Amara Raja from current levels.
Okay, Manjunath has actually asked a very interesting question, Kunal. Would you wait for a little while for fresh buys in this market, or would you in fact wait for a little bit of a correction based on what we're seeing on the COVID front? And that is, I think, a multi-million-dollar question, isn't it? Very briefly, what answer would you give, Manjunath?
Well, I think you should look to buy. I think the markets have corrected 1,000 points on the Nifty and more than 5,000 points on the bank Nifty. You can't ask for too much of a correction, and a little more correction in a market which is looked so strong in the last 1 year. So I think any kind of a 10% drop on the index and a 20% drop almost on the bank Nifty, I think these are welcome opportunities where you should look to invest. So I think if you specifically missed out on the previous quarter of the uptrend, I think it's a good opportunity for you to start at least investing from a longer term view.
All right, our next viewer query is from Indraneel. He wants to know the views on Fortis Healthcare. Raghavendra, we remember Fortis has seen a sharp rally over the last few weeks. Also, today we had Fortis Health Management on ET Now as well. But what's your view on this particular counter?
Well, this entire healthcare and diagnostic space did well in terms of the COVID wave 1, and again they are doing some uptake in wave 2. But remember that government has put a cap in terms of the pricing of RT-PCR test, and so that is not the main business or the revenue generator for a lot of healthcare companies. So I would not buy Fortis Healthcare at current levels in spite of the overall pandemic wave 2 surging. Or even if I'm holding this stock, I would exit at current levels and look for other healthcare space, largely shift into pharmaceutical name, but exit from Fortis Healthcare at current levels.
All right, Raghavendra, I'm hoping that you have a view on this counter. Nino Kuruvilla is asking about Ganesh Ecosphere. which is essentially in the process of recycling of post-consumer PET bottles and waste into recycled polyester staple fiber. That's essentially what it is described as. It's a small cap company, but it's done incredibly well for itself. It's a multi-bagger, if you can call it that, over 200% gains over the last 1 year. Would you suggest that he should hold on to it? I believe that he is invested.
If the caller is invested, hold on to this stock, enjoy the ride till it lasts. As crude would go well, the entire polypack names and sector would do well. The management has come on board and met a lot of funds in the last 2 quarters and explained their overall theme and growth. And I think what they have invested in capacities in the last two years is reaping the fruits right now. So hold on to Ganesh Ecosphere from current levels. It could continue to do extremely well going ahead for a horizon of 1 year or so.
Our next queries come from Shubham Rawat. He wants to know whether he should buy HDFC Bank now or should he wait for some more time for the price to go down. He wants to buy this particular counter for a long term. Kunal, HDFC Bank over the longer term, it's a good performer as well. What should Shubham do? Should he? What are the charts actually indicating for HDFC Bank as well? We have the earnings also coming over the weekend.
So I think it's a good entry point if you're looking to buy from a longer term view. From 1600, the stock has already corrected to 1400 odd levels. So in the last 2-3 days, yes, it's rallied a bit from those 1400 levels. But when you look at it in the entirety, it's still available almost 10 to 12% lower from its previous swing high. So these are good opportunities for large cap names where you're looking to chip in at 10% swing lows. So I think it's a good entry point for HDFC Bank, specifically if you're in from a longer term view.
All right, I'd encourage everybody tuned in to ask their questions because a few active guys are actually getting all of their questions answered. Naresh has got another one. Asian Paints bought at levels of 2,420, 32 shares. He's in the green, Kunal, but he's wondering whether he should hold with hold with the intention of getting more, or should he book profits at this point?
I think you should hold on to it. I think it's just that off late the stock has sprung up into some decent uptrend. For first quarter of 2021, last 3 months, that's the stock was dragging from 2,800 to 2,300, 400 levels, where it went on into a downtrend. It's just off late picked up the trend, so it's still yet to surpass that 2,800 level. So if you're patient enough and if you've already purchased, assuming at lower levels, and you're sitting on to profits, and I believe use that classic trailing stop loss mechanism and keep riding the wave higher. I think if the uptrend continues for Asian Paints, it could break past quite smoothly about the 2,800 mark.
We have one last query for the day, and I'll take Radesh's query. He wants to know whether he should buy Tata Communications for 1,100 rupees per share or what should wait for a correction. And Kunal, I'll come directly to you with this question. Last year, you had Tata Communications and the stock price was somewhere around 300 to 400 rupees per share, and look at where it is actually gone right now. So what should our viewer do? What should Radesh do with Tata Communications? Should he buy or wait for corrections?
I think you should wait for corrections, but I believe that closer to 1,000 odd levels could be a good entry point again for Tata Communication. But then again, this is a stock which gives you returns in a very short span of time. It tends to go through long periods of consolidation. So the rallies are very short term oriented, but then the consolidations are pretty long term for Tata Communication. So if you're in for that kind of a stock, then I believe closer to 1,000 levels, 1,000, 1,050 should be a good entry point for Tata Communication.
All right, Kunal, thank you so much. And thank you, Raghavendra, for taking the time for answering all the questions that you did. Look forward to doing so in the near future. On that note, we'll take a short break. On the other side, we'll get you a wrap of all the earnings that we're expecting right now and what we've seen in the recent past. So do come back.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's talk about the IT sector and Wipro. What a surge coming in on that particular counter and also powering the entire Nifty IT index. So how has the fourth quarter actually turned out for the top three big IT companies? Poonam is here with a comparative analysis.
Well, it's a fairly strong results coming in from Wipro for the Q4 as well as the Q1 guidance is fairly encouraging. In fact, it's a beat in terms of the margins. Although the margins have declined, it's better than expectations. It's a beat in terms of the profitability. And Wipro, in fact, for Q1 has guided for a revenue growth of 2 to 4%, which does not include the revenue from recently announced acquisitions. In fact, they're seeing a broad-based growth across geographies like Americas 1 to Europe, as well as they're seeing broad-based growth across verticals like BFSI, consumer technology, and the rest of the pack. And management also states that the largest ever acquisition of Capco should bolster their BFSI presence, which is one of their largest vertical, and also that they are seeing that all the key markets are growing very well on a YOY basis, and hence they're fairly confident in terms of the stronger FY22. In fact, they also mentioned that they will be funding Capco via a combination of debt as well as internal accruals, although it will be slightly margin dilutive, and that attrition is rising. They do have robust hiring plans and plans of giving increments and bonus. Both TCS as well as Infosys have guided for a double-digit growth. Along with that, they're seeing a strong demand environment. Growth is broad-based, and they also do suggest that the attrition is rising. However, they also do have robust hiring plans as well. In fact, TCS has guided for a double-digit growth, and an aspirational margin band of 26 to 28% should remain intact. For Infosys, although it was a soft Q4, they did announce a buyback at a significant premium of over 25%, and they have guided for a 12 to 14% growth also in terms of the margins. So overall, the commentary in terms of the demand environment from all the three IT players is fairly strong.
All right, thanks so much for that, Poonam. Let's talk a little bit more about Wipro, though. What stellar gains it's seen in trade today. It's up the most since July of 2020, and it has gained about 147% in the last 1 year. In line, in fact, with some of those gains for the large cap IT counters. But let's see what the brokerages are currently saying about this counter. Goldman is saying that it got a sell rating on Wipro with a target of 336. You've got Macquarie that still has an outperform rating with a target of 517. Kotak has an add rating on 480 target price. You've got Axis that has a buy rating also with a target of 520. And finally, Nomura, which is neutral on the stock with a rating of 425. But more buy ratings and outperform ratings than otherwise. And let's, in fact, listen into what the management had to say. Wipro's management, in fact, spoke with my colleague Poonam Sane, and they essentially discussed the numbers in a little bit more detail and the outlook for the current financial year. Listen in.
There's no question that there is a good market. There is a market where there's a lot of demand. We can see across industries in all markets real demand for digital transformation, for cloud services programs, for engineering transformation and so on. So that's one thing, is the market. Second is we have seen a significant evolution of our pipeline and very strong performance in sales in order book over the last 6 months. Frankly, every single of the last 6 months has been strong in sales. And so we've seen, we've closed the second half of our fiscal year 21 with the highest ever performance with 7.1 billion of TCV. And that obviously lead with, a nice wind in the back, if you like, to start the new year fiscal year 22. Third is the fact that, we've been in connection with our clients, and I'm connected with them constantly. And the feedback are very promising and positive in terms of, their level of confidence in us, their trust in us, but also the expectation they have from us to continue to support and help them transform their organization. And so all of that is leading a different level of confidence in the organization. From a supply demand now, we've had 2 quarters in a row very significant in terms of, net addition of number of employees. We've grown significantly, and the demand continues to be strong. So that leads to just a level of confidence for Q1 that support the guidance we've shared with you, Punam.
All right, so the demand continues to be strong according to the management, and that seems to be buoying sentiment in the market right now about Wipro. Let's talk a little bit more about MSCI though. It had a consultation recently on the treatment of potential index additions, and it has released the outcome or the results of that consultation. Vivek is joining us with a detailed report. Vivek?
Well, there was one matter of confusion, one matter where most of the analysts that track the MSCI list of inclusions and exclusions as far as the Indian stock market universe is concerned, one of the matters that they believe that could hinder or hamper the chances of selection or inclusion of a few stocks into the MSCI index was the fact that MSCI had a rule that basically indicated that if there were very, very sharp and volatile price movements in stocks just prior to the MSCI date or the MSCI index review date, there was a chance that these particular stocks may not be looked at in this particular review, but may be looked at the next review. The MSCI actually held a consultation paper for this particular development, and yesterday the outcome of this particular index review or the consultation paper was released. Now, as per both IIFL Securities as well as Edelweiss, this particular development that has come in yesterday basically says that the MSCI has released the consultation of stocks with extreme price increase. Also, what they're saying is that IIFL Securities says that none of the Indian stocks at this point of time are falling into this particular bracket. In fact, even Edelweiss says that at this point of time, it appears as though most of the Indian companies that according to their calculations were in line to enter into the MSCI index. At this point of time, there is nothing that can hamper apart from the MSCI index review candidature itself. So some of the stocks that will be in focus on the back of this particular development would be the Adani trio, Adani Entertainment, Adani Total Gas, Adani Transmission, even stocks like JSPL, BEL, and some of the other stocks that were in line to get included now do have a realistic chance of entering into the MSCI index review come May 12th.
And in fact, that's all that we have for you in this edition of Buy Now, Sell Now. But as always, it's an absolute pleasure to bring this show to you from Cheryl and myself and everybody who put this show together. Thank you so much for watching. Do stay tuned. Lots more coming up in just a short while. This is ET Now.